Good morning and welcome to today's meeting of the Investment Subcommittee, which is taking place at County Hall in Glenfield. The meeting will be broadcast live via the County Council website and be available for viewing after the meeting. Can I just ask members, can everybody switch their microphone on when they're speaking and crucially turn it off when they're finished? And it's usually me who forgets. I've received apologies from Mr. Henry, and Mr. Clark is joining us online today. So the first item is the minutes of the meeting held on the 1st of May 2024. I propose that the minutes of the meeting held on the 1st of May are taken as read, confirmed and signed. Is that agreed? Great, thank you. Agenda item 2, question time. There are no questions. Questions asked by members under Standing Order 7.3 and 7.5. I've received no questions. Agenda item 4, to advise of any other items which the chair has decided to take as urgent elsewhere on the agenda. I have not been notified of any urgent items. Item 5, declarations of interest in respect of the items on the agenda. Does any member have any interest they wish to declare? No. The first substantive item on today's agenda is the cash position as at the 31st of March 2024. Deployment against the strategic asset allocation and proposed private equity commitments, which is on page 9 to 16 of the agenda. Bhulesh Kartra, Senior Financial Analyst, will introduce the report. So, Bhulesh, over to you, please.
Thank you, Chair. So this is our standard quarterly report to update the subcommittee on the cash holding of the fund and its plans for its deployment against the strategic asset allocation. The report also provides information regarding a proposed commitment to private equity in order to maintain alignment to that strategic asset allocation. The cash balances are reported to the committee each quarter. At the last update presented to the committee in June, the cash balances as at the 31st of March 2024 totaled 386 million, with an additional 51 million with the fund's currency manager, hedging manager, Aegon Asset Management. The fund doesn't have a specific cash allocation as part of the SAA, and we have a limit of 0.75% to reflect the cash that's held at Aegon for the collateral for the hedge. As a result of making changes to lower the listed equity holdings towards the target 37.5% of total fund assets, which were approved at the January 2023 committee, the fund has held higher levels of cash, and as such, a cash management strategy for the fund was approved at the meeting of the ISC in October 2023. Moving on to private equity, the fund invests into this asset class via two managers. Adam Street Partners Global Funds Programme is an annual vintage, which the Leicestershire Fund is committed to 10 times with a total commitment of nearly 600 million to date. The fund last invested into an Adam Street Partners Global Fund in 2023 for 49 million. The other manager is LGPS Central. Their PE vintages are smaller in nature. Each new vintage planned to launch every 18 to 24 months. The fund has previously committed to the 2018, 2021 and the 2023 programmes, and the total amount committed to those three central vintages total 80 million. So it's far smaller, but it's a reasonably sized commitment given the young nature of that manager. At the 11th of October 2023 subcommittee meeting, it was recommended that the fund commit 80 million to private equity products with Adam Street and LGPS Central, with the exact split to be confirmed closer to the time in accordance with the private equity allocation framework, which was agreed at that meeting. Moving on to our cash holdings as at March, points 12 to 15 talk about the higher levels of cash, where we intend to be at the end of 2024 and the interest earned on that cash. Just moving on to point 14 there, it's talking about how with interest rates being elevated in comparison to the period, that long period between 2009 and 2022, where interest rates were virtually zero, the fund has been fortunate. We've been receiving interest in excess of 5% during 2023 and so far into 24-25. At the time of writing this paper, the weighted average interest rate on our fixed term deposits is 5.2%. And the rates on the 4 money market funds range between 5.1 and 5.2, and those money market funds are daily liquidity, so we can recall that next day if needed. Point 15 talks about why we are overweight in that cash essentially. We've held higher levels of cash over the last 2 years whilst we await to deploy funds into underweight areas of the asset allocation. These underweight areas have been within the income portion of the portfolio, so think property, infrastructure, private debt, and within the illiquid investments primarily, where managers will call on cash as they make investments. Moving to our strategic asset allocation, which is highlighted within that table at point 16. You can see the changes that were made from 2022 to 2023 and 2024, noting that the strategic asset allocation for 2023 and 2024 didn't change. The main changes, however, are described on that last column on that table, essentially decreasing our weight within our growth assets and increasing the weight within the income assets. The protection group, which is made up of inflation-linked bonds and investment grade credit, stayed largely the same. There is a section here that talks about our listed equity update, because that was one of the larger areas where we moved down from 42 to 37. That hasn't totally completed yet, but points 18 to 22 talk about how we aim to reach that 37.5%. I'm moving forward to point 25, which gives a summary of where we are currently. There's a table there that shows those 3 asset groups: growth, income and protection, and where we are versus that strategic asset allocation as at the 31st of March 2024. The 5th column across shows the difference to that 2024 strategic asset allocation. And you can see we are overweight the growth area, 3.7%. We're underweight the income asset group by 9.7%. Consequently, balances to zero. We're overweight in cash by 6.1%. Both of those differences, the overweight in the growth group and the underweight in the income group, are closing during 24-25. We've got at points 26, 27 and 28 some breakdown on what we're planning to do for infrastructure, global credit, private debt and property. I won't read all of those in detail, but happy to take any questions before I move on to the private equity proposal.
So, members, has anybody got any questions? I think the report outlines fairly clearly what's going on and why it's going on. If no members got any questions, it doesn't look as though they have. Let's carry on.
Thank you. So moving on to that private equity proposal, as previously mentioned within this paper, an 80 million recommendation was approved at the investment subcommittee at the 11th of October 2023, with the split between Adam Street, one of the managers, and LGPS Central to be decided based on the framework that was agreed at that meeting. So the framework is described at point 30. We have a target allocation for things like geography, life stage and origination. The table shows what the target allocation is in the 3rd column, what our actual allocation was in the 4th column, and based on those, we're proposing to keep the split of that 80 million largely in line with what we did at the October proposal, which is a 40 million commitment to LGPS Central, and that's an additional 40 million commitment to the LGPS Central vintage, and a $50 million, which at the time of writing was £40 million also, to the Adam Street Global Partners Global Funds 2024 vintage. Just before we finish there, I was just going to say the fund will need to make further commitments to PE in 25 and 2026. Distributions are currently forecast to be higher than the call, so we are receiving money back from our existing investments. So we will bring another paper back at some point next year. So.
Thank you. Thanks very much, Bullish. So again, Bullish has explained what we're going to do. Has anybody got any queries or questions on that? No? All right. So the committee has been asked to approve an additional £40 million worth of commitment to the LGPS Central Private Equity 2023 vintage, and also approve a $50 million equivalent to 40 million at 1.25 exchange rate US dollar commitment to the Adams Street Partners Global Fund 2024. I'm happy to move the recommendation. Can I have a second? Okay. Is everybody in favour? Yep, that's unanimous. Thanks very much. Okay, we're now on to agenda item 7, review of the Leicestershire LGPS infrastructure assets on pages 17 to 22 of the agenda. Again, Bullish, you're presenting the report. Could I ask you to go ahead?
Thank you, Chair. So the purpose of this short report is to update the ISC in respect to the review of the fund's infrastructure assets, which includes our timberland assets. The SAA target for infrastructure assets, which includes the timberland assets, was held at 12.5% of total fund assets, with timberland representing up to 20% of that. So that's 2.5% of the total fund assets. At the 27th of July 2022 meeting of the IC, a framework was agreed. In order to control risk from a development of asset and geographical perspective, a summary of the target ranges is included in the table at point 4. You'll note that from a risk perspective, we favour core and core plus infrastructure. So we've got a target of around 80% within that core plus, as we call it, which is the lower risk and also lower return. We also favour investing within developed overseas markets. So there's a target of about 70% there, and also a target of around 20% for UK. Moving into point 6, the fund's infrastructure assets are comprised of 7 investments. So that's seven managers. Relatively complicated given a 12.5% target. You can see those illustrated at the table at point 6. The first 3 are open funds. That's the JP Morgan IIF Fund or Infrastructure Investment Fund, IFM's Global Infra Fund, and LGPS Central's Core and Core Plus Fund. You'll note that you've also got the geographic splits and the risk splits in columns 3 and 4. The last 4 funds noted there are Stafford Timberlands vintages 6, 7 and 8. So there's 3 separate investments there totaling 124 million. The new carbon offset fund, which hasn't called any money as at the 31st of March, but has since. We've got 2 older KKR vintages of totaling 49 million, an older infra capital investment 32 million, and slightly newer Quinbrook Net Zero Power Fund, which is still calling money. The last column there shows our outstanding commitments. You'll note we've got 53 million outstanding to LGPS Central's Core Core Plus Fund, which they're yet to call. A similar amount, or all of the amount for the Stafford Carbon Offset Fund, and Quinbrook's Net Zero Power Fund still has a fair portion left to call, 47 million. We mentioned earlier that there is a review that Hymans will present later in today's agenda. Point 7A to F talk about the scope of that review. Timberland investments we'll talk about separately. They start at point 8. We'd said earlier we have invested over a long period of time with Stafford Timberland, so we've invested in vintages 6, 7 and 8, 53 million euros, 30 million US dollars and 80 million US dollars, and very recently 67 million US dollars in that carbon offset fund. All 3 of those original funds, SIT 6, 7 and 8 as they're known, are closed-ended and eventually will return capital as assets are sold to realise capital to return to investors. The fund would therefore then need to make further commitments to maintain that exposure to timberland. Point 10 talks about Stafford currently considering launching a continuation vehicle, as they call it, to invest in assets within SIT 6, 7 and 8. They have been talking to their investors to gauge interest in that continuation vehicle. The main benefit for investors requiring a timberland exposure would be not having to redeploy capital as it is returned from those older 6, 7 and 8 vintages. A continuation fund would therefore help us maintain exposure and that the manager deems are suitable. With that 30th of June deadline for SIT 6, there was a end of term, which meant that they'd have to start to liquidate assets within SIT 6. Officers requested Hymans conduct a review of that continuation fund with a view to potentially investing into that continuation fund. Hymans concluded that review and the fund voted in line with the advice to extend the initial term of SIT 6 by 6 years, conditional upon the continuation fund closing. Point 12, continuation fund will retain many of the original holdings from those 3 vintages, whilst retaining the option to divest those that do not form part of their long-term strategy. The underlying holdings do cover multiple countries and over 50 underlying assets, and therefore is highly diversified. I'm happy to take any questions at this stage.
Thank you for that. Has any member got any questions? Oh, Roy.
Yes, thank you, Chair. Under infrastructure, you've got about 75% in developed markets. Is there any breakdown of quite where that is? I'm conscious that the American market's overheating slightly and the French market, or France is almost bankrupt. So do we know exactly what countries those investments are in?
Yeah, so each of the managers within their quarterly reports does provide a geographical breakdown. Now, some of them don't have it down to individual country, but it's all available if needed at country level. I think that's part of some of the work that we did. We did break it down. I think it's within the exempt part of today's report, so we should get a bit more information later. But yeah, every manager can provide geographical breakdown by country.
Just a sort of peripheral question, but do we still consider India to be an emerging market, or is that now deemed to be mature?
Still very much an emerging market.
Okay, if we have no other questions, the committee is asked to note the report. Is that agreed? Yeah, thank you. So the next item is members are asked to note the dates of the future meeting, the next one being the 2nd of October 2024 and the one after that 11th of December 2024. There are no urgent items. Item number 9. So we now come to the exclusion of the press and public. So I move that the public be excluded during consideration of the remaining items in accordance with section 100A, subsection 4 of the Local Government Act 1972, exempt information. Is that agreed? Thank you. We will now move into private session for consideration of the remaining agenda items. There are no people in the public gallery, so we just wait for the live stream to end. So once you've